Alright, hello everyone and welcome to the Mark and Manis webinar of Sunbird Effects with your host Adam Williams. Today's webinar we will be learning about pending orders. We also going to review a few strategies that we have worked on in the past weeks. Also, I'm just going to show you on my personal platform on how to do it live. That's going to be awesome. And yeah, so I hope this webinar is going to benefit all of you from trading, so that you can maximize your profits, minimize your losses, and trade professionally like all professional traders. All right, so let's start our webinar. Okay, so in our first course, we started introducing our trading plan, and we started our first strategy, which is the SNR strategy. Also on our second course, we did the second and third course, we did the EXPT strategy, expecting market movement. And today's course will be about pending orders, the definition about pending orders and how to base them as strategies. All right, pending orders and applied strategies. First of all, let's do a small review of exactly what we have learned in the past weeks. Sorry. We have the SNR strategy, the basic strategy, so we all know exactly what happens. So let's review it very quickly. First of all, we will be what you need to do is that you need to set your lines at the support and resistance levels. We will need to calculate the average of the resistance and support, which we will be calling it average 1. How do we calculate average 1? It's the support and the resistance divided by 2, and you have the rate of average 1. Remember to write down all your results. As you can see from all the courses that I gave, I specified it on every webinar that we need to write down our results. Okay, so we have our resistance and support. Now, our first SNR is that if market breaks the resistance, we go long all the way, and if market breaks the support, we go short all the way as well. Our stop loss would be our average, AV1, and our take profit, personally, I would expect 30 to 50 pips of profit, and I'll show you later on how it works. Remember that I will be giving sooner or later 5 to 10 minutes to ask any questions, so don't worry about anything. If you want to write your questions, write it down somewhere else, and then when I'll be giving 5 to 10 minutes, please write down your questions so I can answer them and repeat the question to everybody else. Okay, moving forward. Let's review our second strategy, the EXPT strategy, which stands for expectation strategy. Again, we will need to set up our lines on support and resistance levels. We will need to calculate average 1 like we saw previously. We will need to calculate average 2, which is our resistance plus average 1 divided by 2. When I say resistance plus average 1 or resistance plus support, it's our resistance rate plus our support rate or average 1 rate, etc. So calculating average 2 is simply you calculate the resistance rate plus the average 1 rate divided by 2, so you get the rate of average 2. And calculating average 3 is calculating the support rate plus average 1 rate divided by 2, and you have your average 3 rate. Now, how do we start our EXPT strategy? Simple. Now that we have set up our lines, our resistance, average 1, average 2, and average 3, we start expecting a few two things. So we have our first expectation, which is if market goes above average 1, if it goes higher than average 1, expect downward. Now, when to expect it, it needs to pass through either average 2 or average 3. Sorry, I put V3, but it's average 3. So it needs to pass through. So it goes above average 1, higher than average 1. Wait until it breaks average 2. So once it breaks average 2, get ready to open a position. Once you got ready to open a position, when to open a position, you open a position at a new rate. So once it it closes on the rate and has a new rate. Open your position on short, all right, and go on a sell position, and you'll see that the market will be going down. And then you do it's a bit about I would say like opening positions, closing positions, opening another position, exactly like scalping, but manual scalping. On this course, you will learn exactly how to do professional scalping using pending orders. Nothing to worry about it. This is just a review. Second expectation is if market goes below average one, expect an upward trend, expect it to go back up. So it needs to pass through average 3, as you can see here. Once it passes through average 3, get ready to open a position. Wait until you have a new rate that's coming up, and then open your position on long, on a buy position. As you can see here, I did if first expectation is good, if market goes above average 1, and it passes through average 2, open a position to new rate until the current rate closes and you have a new rate. So you open your position, your stop loss is your resistance, and your take profit is average 3. Now, second expectation, sorry, I forgot to change it. This is not exactly it. Second expectation is if it passes through average 3, meaning it goes below average 1, expect it to go back up. It needs to pass through average 3. Pass through average 3, get ready to open a position. Open a position at a new rate. Your stop loss is not your resistance. Your stop loss is your support, and your take profit is average 2. Okay, so we're going to continue like that at every time. All right, so we reviewed quickly our 2 strategies, the SNR strategy and the EXPT strategy. Moving forward, I just showed you a small SNR strategy. All right, as you can see, this is a graph. Just remember, I know that there's a question. This is not Lucia. This is Adam Williams. I've been giving these webinars. I hope you do not get confused. Now, don't worry about anything. All right. If you need to ask questions, please ask them at the end when I'll be giving a break, and I'll answer everything. All right. So let's review very quickly the SNR strategy on the platform. As you can see, this is my personal platform. I'm going to show you on live platform how to do it. So as you can see here, I put a resistance. I put my resistance here. I put my average 1 here. My support. This is exactly where when I woke up. Let's say this is the start of the day, 11th of February. I know this is the 18th. We're going to review a few things on the 18th of today's market. This is just a small example. Let's say I know some of you wanted to know with the time difference. First of all, for the EXPT strategy, I want you to make sure that if you are using the EXPT strategy, you need to use it on the normal volatility of the market. All right. If you see an upward trend, it won't work. The EXPT strategy works on normal volatility. Normal volatility is when you see a normal market, when it doesn't either go up, neither goes down. It's not going on an upward trend, or neither on a downward trend. An upward trend is when the market goes constantly up, and a downward trend is the same thing, only the opposite sides. Now, so this is just a basic SNR strategy. As you can see, I put my resistance again here, my support here. This is exactly, I'll tell you exactly when I actually open my platform. It will be between 8 and 10. And this is when I put my my resistance and my support and my average 1. And basically, on the SNR strategy, if it passes through resistance or support, I either go short or long. And here, I opened long position, and as you can see, it went back up. Now, you can put another here, as you can see, another strategy, another SNR strategy. After that, my SNR strategy worked, I can put another one here put my lines, put my expectations, and open my position. Remember, this is on the CHF JPY. Now, you can put your resistance anywhere you want. If it passes through the resistance or the support, then you can go either long or short. All right, so this is just a small example. We will be reviewing on a live platform how to do it. Let's continue. All right, so everything to bring you here now that we have reviewed our strategies. Sorry, I didn't find any EXPT strategy to set my strategy in, because market volatility last week was very high, and there was no normal volatility in the market. But nothing to worry about, nothing that we can't use today or tomorrow or this week or next week. Basically, remember that at the end of our program, you will know exactly what strategy to use on every currency. All right. Okay. So pending orders. What exactly are pending orders? Pending order is an instruction to open a position when the current price reaches the order level, meaning that pending order is when, for example, if market rate is at 1.5, now you want to put a pending order at 2.0. When it reaches 2.0, your position will be automatically opened with the stop losses that you put and the take profits as well. Now, there are 4 types of pending orders, and you will learn exactly. Remember, I want you to know exactly what pending orders are and what are the 4 types of pending orders. So let's review that. So we have 4 types of pending orders. Our first one is called the buy stop. The buy stop is an order to open a buy position at a price higher than the price at the moment of placing the order. Meaning, a buy stop, it's a buy position at a price higher than the price at the moment of placing the order. Very simple. Let's say the market rate is at 1.5, and you want to put a buy stop at 2.0. All right, 2.0 is at a rate higher than the current market rate. So once it reaches 2.0, you go buy, you go long. This is a buy stop. A sell stop is an order to open a sell position at a price lower than the current price. So if, let's say, your current price the current market price is 1.5, at 1.2, when it reaches 1.2, it sells. This is a sell stop. Okay? Now, buy limit. What is a buy limit and what is a sell limit? A buy limit is an order to open a buy position at a lower price than the current price, than the current market price. Meaning that if the current market price is 1.5 and it reaches, and your pending order and your buy limit is at 1.2, once it reaches 1.2, you buy. Okay? Sell limit is the same thing. It's an order to open a sell position at a price that is higher than the current market rate. So if, let's say, your current market rate is at 1.5, once it reaches 2.0, which is your sell limit, you go short. You go on the sell position. All right, very clear. I'm just going to repeat it. Buy stop is a buy position at a price that is higher than the current market rate, meaning that if current market rate is at 1.5 and it reaches 2.0, this is your buy stop. It opens a buy position. Next, sell stop. Sell stop is an order to open a sell position at a price lower than the current market price. If current market price is at 1.5 and it reaches 1.2, which is your sell stop, it opens a sell position automatically. Now, a buy limit is a buy position that is lower than the current market price. So if, let's say, again, current market price is at 1.5 and it reaches 1.2, which is your buy limit, it opens a buy position automatically. Sell limit, same thing. It's a sell position at a price that is higher than the current market rate. So again, if current market rate is at 1.5 and it reaches 2.0, which is your sell limit, it opens a position on the sell, a sell position automatically, and your position is open. Okay. Now we will be learning exactly how to use them. I'm just going to show you a small graph here. Now you can see here this is a green line. Your buy stop is higher than the current market rate. Once it reaches here, it opens a buy position. This is a buy stop. A sell stop. Okay, a sell stop is when the current market rate is, as you can see here, and your sell stop is lower than the current market rate. And once it reaches your sell stop, it's going to open a sell position. Now, buy stop and sell stop, we are going to use it for, if you can relate to our strategies, you can use it for the SNR strategy. Okay. Now, the buy limit is a buy position. Once the current market rate in green, as you can see here, reaches the buy stop. Once it reaches the buy stop, which is lower than the current market rate, it opens a buy position. Sell limit is the same thing. Your sell limit is higher than the current market rate, and once the market rate reaches the sell limit, it opens a sell position. And we are going to use this for our EXPT strategy. Now later on with my platform, I am going to show you how to use both of them, both of these strategies at once. Let's move forward. Now remember that pending orders will allow you to have, again, as you can see here, I wrote it down, it will allow you to have a safer trade, a low risk position taken in the market. Instead of just opening positions, anonymous positions, or using my strategies, instead of having to open a position right away, you can just put a pending order and everything will be done automatically. Okay. I'm going to show you right now the strategic move part. It's kind of it's part of our trading plan. Now I know that in our previous courses I told you how to write your trading plan. My goal is for you to write your own trading plan. So basically what you need to have everything written down, whether it's on a piece of paper or on a book or on your Word document or on the computer or writing on writing. It's the same thing. As long as it's written down, this is your T plan, your trading plan. So you need to write down your trading plan, your lines, write down your rates, your stop losses, your take profit, your resistance, your support, everything. Now, what I would suggest is that on another piece of paper or on another Word document, I want you to write down all your expectations, all your strategies that you learned up until now, and so on, so that you don't need to take too much space on your trading plan. You have another page where you have all your strategies, so that you can know exactly on what rate what strategy you can use on what rate. So if, let's say, on the USHF, you know it's a normal volatility or of I would say an upward volatility on an upward trend, you know exactly what strategy you can use. So again, write down your strategies on another piece of paper or on a Word document or any documents, any programs, whether it's on a Mac or on a PC. You know how to do it by yourself. So yeah. So again, set up your lines like we said before. It's very important to write down your positions, everything, your rates, everything. Remember, I'm going to repeat it on every course. You need to write down everything. Okay? Have your expectations ready. Always good. You'll know exactly what to expect, at what moment to expect, everything else, like the XPT strategy. Again, write down your trades you want to open. Remember to set your limited trades. If let's say I want to open 15 trades per day, I need to separate them on what currency and then how many lots I want to open my positions with. So you need to have this figure it out by yourself, depending on the amount of money that you have for yourself. Also, at the end, when you have your expectations, your strategies, and so on, you need to assign your pending orders, and we will be learning exactly how to assign these pending orders. So before we continue, I'm going to show you a live market on my personal trading plan. On my personal platform. For now, I'm going to give 5 to 10 minutes. Feel free to ask any questions. I'll be waiting and will be answering. So go ahead. Okay, so we have a few questions here. The strategies specified, are they available somewhere for review? Well, these strategies are available at our website. Reviewing the webinars itself, it's going to be even better. If you review the webinar, you can go on sunbirdfx.com. You go on education, and then you go on webinars. And on webinars, you're going to see Market Madness. I'm going to upload this webinar later on after I finish, and you will be seeing the full strategy by yourself, and it'll help most clients to write down and to start building their own trading plan. We have another question. What is the difference between market orders and pending orders? Okay, market orders are instant orders. So if let's say a market order is at 1.2 and you just click open position and the position will be open right away. If you're putting pending orders, again, like we saw before, pending orders are when are positions that will be opened once it reaches the rate that you chose. So this is the difference. Again, we have another 6 minutes before I continue. I continue the webinar and I start bringing you all to our live trading. Okay, we have another question here. Can we use both strategies at once? Yes, we can, and I will show you exactly how to do it. Just stick around, and I'll show you on the live market how to do both strategies at once. 5 minutes ago. Take advantage of asking questions. Okay, we have a wonderful question here. What is the success rate of both methods? Very, very interesting question. I'm happy you asked. Now, on the SNR strategy, the SNR strategy is one of the most efficient strategy yet. If you can even try it, you're going to see that it works, because if in every currency and I'm telling you personally, in every currency, if it passes through either resistance or support, you can know exactly what's going to happen. So I would say that it is mostly efficient unless there's one condition. That's why strategies are never 100% accurate, unless there's a correction in the market. Now, what could trigger a correction in the market? Let's say news or economic events or anything like that. For example, as you can see, President Draghi speaks a lot this month. So every time that he speaks, a lot of things can go wrong. For example, you can expect the market to go up, but when President Draghi tells that we need to provide a bailout plan, everything goes down. So this is a correction from the market by an economic event, by news, by fundamental analysis. Everything can go wrong. All right, but on normal volatility, or on, for example, if you want to use the SNR strategy, I would say it's 99.9% efficient. That 0.01% could be a correction from our fundamental news. These news could be from 0.01% to 100% correction. All right, but you will see that in our economic calendar, you don't see President Draghi. You don't see the ECB President Draghi speaking a lot on a daily basis. Normally, it's about 3 to 4 times a month. So when you see it, you better expect the market to go as what is expected from President Draghi. Now we have another question. Do we need to be in front of our PC the whole day to make money out of trading Forex? No, that's why I'm teaching you exactly pending orders, so that you can assign your pending orders and you just do whatever you need to do and everything will be open automatically. Okay, we have a remark here. All right, that's interesting. I think that pending orders are risky as well, because in both cases, markets and pending orders, the price could go wrong direction with equal probability. Well, that's why I showed you on our previous courses. I don't know if you attended to these webinars. I showed you how to minimize risks. That's why we're using stop losses. Remember that in stop losses, and every time that you trade Forex, you need to understand that there is a possibility that you will be losing money. All right? What we want to do is that we want to minimize that possibility and maximize all possibilities to make money. So on minimizing that possibility to lose money, you need to understand and you need to figure out how much money are you willing to lose. So for example, let's say I'm a trader. Personally, I am. All right, I deposit it on a brokerage on a broker account. Let's say $1,000. I'm willing to lose, let's say, $200. So I want to minimize that to $200. Now remember, in our first course, I told you exactly what is my targeted profit per week, and what is my targeted loss per week. Meaning that how much money am I willing to lose and how much money am I willing to make. Now, pending orders will do are orders that will be opened when your expectation is good. So if, let's say, I'm expecting the market to reach, if the market rate is at 1.5 and I'm expecting it to reach 2.0, and then I'm going to go open long because my expectation is basically good, but until it doesn't reach 2.0, my position won't open. So I'm putting less risk. So I'm not waiting for the market to reach 2.0. I'm waiting for the market to reach 2.0. If it doesn't, my position is not open. So I just saved myself a bad position. Now, I would disagree on risk. I would disagree that pending orders are risky, because they're not. If it doesn't reach the rate that I put in, then I just saved myself a bad position. So just to clarify, now the strategies that I'm teaching you are not 100% accurate. The only thing that could trigger that 0.01% of these strategies are the economic calendar, the news. Whenever you see that something big is going to happen today, tomorrow, this week, next week, or something else, you don't need to always use my strategies. You can use them based on the market news, meaning that if, let's say, President Draghi speaks on the ECB, we know that the euro will take a large effect on it, whether it's going to go up or down. So you need to see exactly what's going to happen. So what's happening right now? So let's say Greece needs a bailout plan. So if Greece needs a bailout plan, so President Draghi will be providing it, and the euro will fall down. So you can put a pending order, you can put a SNR strategy that if it reaches a certain rate, if it goes down by a certain rate, just go short. And then you have your position opened with your profit taken. Okay, so now let's go exactly, let's see how we do this on the live market. Just to clarify, I hope that for the remark that was said, I hope I answered with the right answer. Okay, so let's continue with it. Let's go on the live market. Let's check out the euro US dollar. Now, remember, the euro US dollar, I would suggest to put to 15 or to 30 minutes. Okay, now that I put to 15 minutes, okay, perfect. Let's move in. Okay, I'm just going to set up a line. Remember, on your platform, if you do Control Y, you're going to see the line that is set on the beginning of the day. Here I need to put it myself. At 0, 0. On your right side, just put a few annotations so that I set them up later on. I'm just going to put a few lines here so that everybody can see. Okay. Now, this will be my lowest rate, which is support. Here you go. Resistance. Let's put it here. Now, resistance, let's say I'm kind of late, so let's say I missed my chance. But this is just, I can put my resistance either here. Just a second. Let's copy this annotation. let's put it here. Okay. Now, you can put your resistance either here, here. Okay, let's say I woke up early. It's 10 a.m. You can see here. Let's put in another line so all of you can see it clearly. Okay, I'm just going to do a few things. Okay, so we have our resistance, we have our support. I put my line here so that, let me just make it clear so that everybody can see clearly. Okay, so the green line is the beginning of the day, the yellow line, vertical line is when, for example, if it's at 10 a.m., so I just woke up at 9, I'm opening my platform at 10, this is what I got, let's say. Okay, now I have my resistance, my support. Let's calculate average 1. Okay, so 1.33534, which is my resistance, plus 1.33212 divided by 2. 1.33373. So let's put a line here. 1.33. Let's see again. 33373. There you go. Doesn't need to be very accurate. Okay. Let's make it a bit bigger. Oh. Okay. I have my resistance, my average 1, and my support. Now let's calculate average 2. How do we calculate average 2? Resistance, which is 1.33534, plus average 1, 1.33373, divided by 2. 1.33453. 1.334. Oh. Sorry about that. Okay, and let's put another line, which is my average 3. What is my, how do we calculate average 3? Support, 1.33212 plus 1.33373 divided by 2. 1.332, let's say 292. 33292. Here we go. Okay, so let's set these lines so that everybody can see. Sorry if I'm taking long. This is for your own good. Okay. Okay, so I set up all my lines. All right? All my lines are set up. Okay, here we go. Let's start using the strategies, both strategies, and let's start using pending orders later on. Okay, so first of all, I set my lines. I put my resistance either here or anywhere else. Let's put it in red so that everybody can see. Okay. So let's say my resistance was here. If let's say I open my platform here at 10 and I decided to open my positions a bit later on. So I set my lines here, as you can all see. Okay. So let's start our expectation. So I opened my platform at 10 a.m. I saw that the market was going down. All right. It passed through. If let's say I was not sleeping, and I just continue analyzing the market here. So if let's say again, let's use the EXPT strategy. So the EXPT strategy went below average 1. Okay, I'm expecting it to go back up, but I needed to break average 3. It broke average 3. Went on a new rate, and I opened my position and then went back long. It passed through average 1, so it's higher than average 1. So I'm expecting it to go back down, but I need to wait until it breaks average 2. Breaks average 2, I'm getting ready to open my position, changing the rate here, open my position, went back down. So as you can see, my strategy on the XPT is efficient. This is, from here to here, is a normal volatility. Okay, this is a correction. The big buy here, when the market went ballistic and went back up, this is a market correction. Now, here, as you can see, my resistance, okay, it broke the resistance, and I'm going back, and I'm going on long. Okay. And then it went back down and then went back up. You can decide, I said from 30 to 50 pips of difference. You can close your position and you're all good. Okay? And when I told you to, if the resistance, it breaks through resistance, stop loss is average 1. It still didn't reach stop loss, so you're still making good profit, nothing to worry about. All right? And also on the XPT strategy, it works and you just made double the profit. Now, how do we put pending orders? Okay, we want to put a few pending orders, let's say. So let's start with the SNR strategy. Okay, what does it need to break? It needs to break either resistance or support. So again, what we need to do, let's review again. I'm just gonna go back up. Okay. Buy stop. Buy stop is an order to open a buy position at a price higher than the price at the moment of placing the order, meaning that if it breaks through my resistance, it's a buy stop. So let's put a buy stop. Yeah. Buy stop. Okay. This is my buy stop. If it breaks through resistance here, so my buy stop is at 133.534. Sorry. If it breaks through this one, I would prefer making it a bit higher. So let's say 1.33 instead of 534, 545, or a bit higher. Okay. It broke through my buy stop. It went long. And then I close my position whenever I want. 30 to 50 pips, doesn't matter. Okay? If it breaks, or if you want on current market rate, you put your buy stop here. If it breaks through this resistance, your buy stop, if it breaks through 1.33794, again, I would prefer 33 instead of 794, 310, for example. If it breaks through this rate, go long. Put a buy stop. You can put a buy stop here as well. Okay, so this is my buy stop. Okay, now a sell stop, let's review again, is in order to sell a position at a price lower than the price at the moment of placing the order. Okay, sell stop, let's put another annotation here. sell stop would be here. So if the sell stop is lower than the current market rate, so if the current rate goes 1.33212, so let's say a 1.3320, okay, it breaks through this rate, your sell stop is ready, it opens your position automatically with the stop losses and take profits. Okay, so now we settled our sell stop and our buy stop. Let's put it aside here. Now, if we're dealing with the market, okay, oh, sorry, my resistance a little bit higher. Here we go. Here we go. Because of this. Okay, so if let's say we're talking about a normal volatility, let's do buy limit and sell limit annotations. Buy limit. Sell limit. Okay. So again, let's take our first expectation. If it passes, it goes below average 1, it needs to break average 3. Once it breaks average 3, and you put your, let's say it broke average 3, and you're putting, let's say, a rate a bit below average 3. So let's say instead of 1.33292, 1.33275. So once it reaches 275, okay, put a buy limit. It opens your position automatically, and it goes back up, and you take profit at average 2, and you take profit here. Okay, sell limit, same thing. Needs to break average 2. It broke average 1, expected to go back down. Breaks average 2, put a rate a bit higher than average 2. Let's say, for example, 1.33465. Your position is automatically opened. Sell limit goes back down to average 3. This is your stop loss, your take profit. Okay? So you have how many positions? One opened under profit, 2 open under profit, 3 open under profit. So you have already 3 positions opened that are under profit. Now I'm just going to stop here, all right, because it's a lot of information. I put both the strategies at once using pending orders. Now I'm just going to stop here for a moment. If you have any questions, I'll give like 5 minutes to ask them. Feel free. I want to know if everybody understood how do we use it. Okay, we have a question here. What is the best time to use it? I personally use it on 15 minutes or 30 minutes. Normal volatility, maximized profits, and minimized losses. Okay? All right, so let's do it on instantly right now. Okay, let's set up all our lines. Okay, so I have my resistance, I have my support. Let's calculate everything. So if my resistance is at 1.33794, 1.33794 plus 1.33212 divided by 2, and you have 1.33503. So let's put it 1.33. Oh, let's do this 503. Okay, this is my average 1. Let's do average 2 and average 3. Okay, so average 2 is resistance 1.33794 plus 1.33503 divided by 2, 1.33649. Putting it, it's a lot of patience, but a lot of patience will bring you only a lot of money. Okay, again, average, this is average 2. Okay, now let's calculate average 3. 1.33212 plus 1.33503 divided by 2, 1.3358. And we have our average. Okay, great. Let's do this. Now, if it breaks through the resistance, buy stop. Okay. Good, sell stop. All good, all good. All right. I see that it is average 1. Okay. If it doesn't break average 3, I'm not doing anything. It needs to break average 3. I want to be sure that my EXPT strategy will work. If it works, I need it to have all the conditions. It needs to break average 3 or average 2. At the moment, it's getting higher than average 1, so I'm expecting it to go down. But when can I open a position? Only when it breaks through average 2. So I have everything. Okay, if it breaks through average 2, let's put this rate a bit higher. And this rate a bit lower. Okay. So when it breaks through these rates, and we have a new rate, if it breaks through these rates, my buy limit is this rate, and my sell limit is this rate. My buy stop is that rate, a bit higher. Again, we don't want to be too precise because it could go against us. So we're going to set the buy a bit higher, and we're going to set this bar a bit lower. Okay, so this is exactly on how to set up all your lines in your platform. Okay, I put my sell limit, I put my buy stop, I put my buy limit, and I put my sell stop. All right, I finished with that currency. I move on to the next, and to the next, and to the next. Okay, when I see that these positions are opened, remember, you set up how many lots you want to open. If let's say you want to open 0.1 lot, if let's say you're putting a limit of 5 lots per day, okay, so this is 0.5, 0.5, sell limit also 0.5, so it's 1 lot. Another 0.5, 0.5, 2 lots, and you have 3 lots to go. So you just need to handle. You need to decide how many lots, how many trades you're going to open, and how many lots you're going to open. Okay, so this is exactly on how everything works. Okay, let's go back to our, again, here I did the same thing for those who want to pause it on the webinar, but preferably on what we saw in our live market would be best. Okay, about pending orders. Okay, pending orders will allow you to ease on our strategies. Instead of waiting patiently for the market, we need to assign them to open automatically when the market rate reaches our desired rate. Very simple. Instead of waiting to be in front of the computer all day, just need to set up your pending orders and you're good to go. So we saw that we could use our strategies and use our pending orders. It's a very, very, very important course in our plan. Oops, sorry for that. Let's go back to where we were before. Okay, it's a very important course in our plan simply because you don't need to wait until the market reaches a certain rate. You just need to put your pending order and you're good to go. You're minimizing your risks. Why? Because if it doesn't reach your desired rate, you just saved yourself a bad position. Very simple. Okay, Remember to write down everything. I just showed you right now on the live market how to set up my lines and how to open my pending orders, but it doesn't mean that you need to follow exactly what I did. Since it's a webinar and I have a limited time, so I do my best to give you the best and fastest webinar possible. Now, okay, so write down everything, very important, and assign them as pending orders. Remember that our main strategies will be based on pending orders. So learn exactly on how to use them. This will help you a lot. And basically this is it. Remember that my main goal is to make you understand exactly on how everything works, to form you to be a professional trader, to be a forex expert, to know exactly what to do and when to do it, instead of just asking questions, what to do right now, should I open there, should I open other. You have your expectations, you have your strategies, use them. They will bring you a lot of money. I have more than 100 clients that are giving me feedback on my webinars, telling me these strategies work. Most of my clients are making 50 to 100 pips per day, all right? Not per week, not per month, per day. So this strategy works. If you use them correctly, everything will be set to go, good to go, everything, okay? Remember, if you want to actually grasp the idea of making money through these strategies, you need to learn exactly on how to use all the strategies. So you can verify the RNS and EXPT strategies on our website. Remember, you'll reach at a level of profitable trades that you have never seen before. I have clients that are making thousands of dollars using only these basic strategies. They're very basic, okay? So remember to use them correctly. It's nothing new. It's basic strategies that I developed, and I know other traders developed as well. But I made sure that all my clients do know the secrets of these strategies, so that they can grasp the strategy and they can use it at the best time possible. Okay, and just remember, this is only the beginning. We didn't even start using indicators, so we're just using basic strategies. I'm going to give you one last competition, because unfortunately this is the last webinar that I'm giving for clients that are not registered to Sunbird FX. For those who want to open an account, I'm just going to give you my referral number, because from now on I will be giving the webinar to active clients, and active clients have to have accounts with us. And for those who are new to this webinar, to every webinar, and that don't have any accounts with us, I'm giving my referral number for now. All right, maybe I can change the fact that I can give free webinars for everybody. I will be fighting for it, but for now, from now on, for those who want to open an account with us, this is my referral number. Feel free to open an account, and you will be going straight to me, Adam Williams, and I will be taking care of your account and you as well. We have a competition until next week, next Monday. The competition is the client that makes the most profit with both strategies. You can choose which one you want, using pending orders only. Okay, we'll get ebook of the Forex Secrets, $200 bonus, personal course from Mr. Williams, myself. Instructions, you need to send an email to info@sunbirdfx.com with your account number and name and the competition code, which is capital C 2626. Hopefully you'll all enter. Remember, for now, for those who want to participate for the webinar and start our first indicator, you will need to open an account with us and use 1090 as a referral number. Okay, and you will be led straight back to me, Adam Williams, and I will be taking care of you, and I will lead you to our webinars. Thank you very much for coming. Remember, we have our Facebook page, Twitter, everything that you can see here. Feel free to ask any questions. We will be more than happy to assist you, especially me. If you want to contact me, feel free to send an email at info@sunbirdfx.com or on my personal email at adam.williams.fx@gmail.com. Thank you very much for coming. Hope you had a wonderful webinar like I did. Hope to see you very soon. Thank you very much. Bye-bye.